Testing 1 2, testing 1 2. Are we live?
We can talk it over anytime you want. We can talk it over till
Hello, hello. It's gonna be a good one.
the sun and I say we can talk it over.
It shall be a good one. Just setting up my stuff and we're good to go. What's up, Bommel, Scraptics, Edian, F1, Zaphus, Bazit, Marvin, Gummy, Excellion, Thominator, Fucking Good, and Rappy XBT. We got a lot to discuss. And not so much time. We got about 13 minutes till FOMC, if I'm not mistaken. Oh my god, we got Jared Vennet in here. A lot of the OGs are back. Shit. Let's make it a good one, boys. All right, live scene, live scene. And we're live. Oh god. Okie doke. Let's see what we got unforming, or unfolding, I should say. Couple of first-time chatters. It's good to see you guys. Welcome to the FOMC stream. Surely a good one. That's the children. That is the children. It's a good song, classic. Tons of renditions though. I'm pretty sure that's some sort of remix. Yeah, we'll talk about dominance. We'll talk about a bunch of things. Rejecting from the 58 to 60 area, so nothing out of the ordinary. Ideally, I'd like to be somewhere in the middle of this. Just create like a nice little lower high there. All right. Let's get all my stuff in order over here. Still long on BDC, but feeling kind of nervous about it. I'm not gonna lie. We're good. We're good. Very good. All right, let's see what we're going into here. ETH holding up impressively, a lot better than BTC, so that's a good sign for the ETH heads. Dropping dominance here most probably means Ethereum outperforms. I'm waiting for 39.26, something like a pop like this. Get long, consolidate, continue popping. This is what I want to see on ETH before we make any decisions. It was a good call yesterday not to bite, so no hyperliquid just yet. No. I'm a boomer. You gotta give me some time over here. What's up, Sturdums? Some first-time chatters here, but I imagine it's just because it's your first time making an account. So if you've been around for a while, nice to see you again. If it's your first time chatting here, nice to see you nonetheless. What's up, Kike? How we doing? A lot of familiar faces in here. Oh, what do we got on the board today? It's been pretty much a trendless day. Mostly risk off for me. Yeah, I've heard a lot of good things about hype. It's not that I'm not into poker. I never have anybody to play with. I imagine I'd be very good at it though. Just need to be familiar with the hands. Gummy, there's no way you donated $1 to say, please send me your CR7 signed shirt. It's not happening. Unacceptable. This request I cannot do. I need to put on. We're putting on this hat over here because we're putting on this hat over here. I'm not liking the hairline today. All right. So what do we got? Okay, Soul, interesting level, 221.20. We reclaimed that. Might want to get long. ETH, again, allow some time to unfold here. I don't care if it pops. I'll see that as a sign of confirmation. I want to see something like this. Until then, we probably look for somewhere down here to get long, just in case. Don't want to overtrade today. He absolutely donated $1 and asked for the shirt. I'm pretty sure in like the top right over here, you can see Gummy God is taking over the stands. What's up, Razor Trade? Ooh. Today's a pretty conflicting day. I can't lie to you. Let's see. Do we have any eventful news? Despite corruption scandals involving top military officials. What's going on over here? Beijing's armed forces continue to modernize, extending naval operations. Okay, this is irrelevant. We got about 8 minutes until FOMC comes out. So you're going to start to see the speculative side go banana bread. Nobody is getting the shirt, guys. Nobody is getting the shirt. It's out of the question. It's not happening. It's not happening. Get your own. You want to get your own over here. All right. Let's bring up the macroeconomic calendar. Holy moly, man. Flashbang. Man, we got quite a bit of viewers today. Nice to see you all. If it's your first time here, we're going to have a good time. It's going to be a lot of fun. So, about 8 minutes away from something we pretty much already know. Right? That's not really what we're here for. We're here more for Powell's comments. I think that's what's going to matter the most. So just to keep you guys up to speed, covered in the group chat earlier this week, or earlier in the morning, I should say. Okay, this is way too bright. 98.6% chance of a 25 basis points cut. That's to be expected. General consensus. Very, very unlikely we hear anything different. So that's not what the market is betting on right now. This will be the last FOMC before the Trump administration takes over. The last FOMC of the year. So naturally, it's a pretty big deal, right? Now, what are we looking for? Typically, we want Powell to remain as neutral as possible. We want him to conduct his business in a very professional manner. We don't want him to discuss politics, anything to do with the new administration. As far as we're concerned, Powell has his own plan, his own agenda, and he chooses to follow it. That's what the market's looking for. That's what they want. They don't want to hear no political favoring and yada, 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 and we're not meeting our targets. We want to hear that same usual good stuff, that sweet nothing that Powell loves to give us, and that's what's going to be the green light here. Now I do expect with FOMC coming 2 weeks before Christmas, or just a week before Christmas, I'm going to expect that trading does die down a bit. The holiday season is approaching, Christmas, New Year's, etc., etc. That's what's really going to slow down the trading operations, at least for the next 2 weeks. So I assume this is the last event people are paying attention to. And then from there, should see a slow drop off in volatility, but I am open to surprises, and we'll keep it from there. All right, we got a lot of chatters today. My goodness, can't believe you got a Ronaldo signed jersey, such an OG one. It's one of my favorites. It's even signed by Modric, man. We got Luca on that. What's up, Grim? What's up, Fizzy? And Woods is the boy, so shout out to him. And it's a good afternoon and a good evening to wherever you may be. I understand not everybody is... Lalish, I missed you too. Hopefully we can continue the schedule over here. Osbra with the suburb, my man. No way you did that. No way you just did that. No way you just did that. Thank you so much. All right, let's take a look at our resting order bids over here. We even got John that shared. Shouts to John. Class act. Major love to him. It's currently 1:55 in the afternoon where I am. I understand we got some Europeans in here. maybe even some from the Asia time zone. So I imagine it's pretty late for you guys. We're gonna have a good time today. We got about 4 minutes until FOMC pops off, and then from there, we have a 30-minute waiting period. Probably just gonna see how the market moves around. Again, we're already long on BTC, so we're hoping nothing bad happens. We're from 96K. I'd be truly shocked to go underwater in the middle of this stream, but stranger things have happened if you've been here before. Yeah, we're really not too concerned about the data print. That's pretty much a confirmation, 98.6%. And again, flashbang through the door. Damn, we got people from all over the world here today. So it's very nice for you guys to join us. We'll have a good time. We'll have a good time. Just taking a look at some stuff over here. For the most part, pretty hedged, risk-off day. I'm hoping we just get news as expected. I already kind of hedged into it. So again, if it's gonna move, it's got to move from here. Where's the Messi one? Look, I am a fan of Messi, but unless someone hands it to me. You see any Barca shirts back there? No, he's a class player. One of the best, if not the best. I have respect for both players. They gave us the greatest gift football has to offer, and I respect them both tremendously. But I clearly have a favorite. No basketball players? I mean, we got Real Madrid's basketball team over there. I'm not really much of a basketball watcher, but I do enjoy the sport. But no jerseys added to my collection just yet. We got some hockey ones back there. We got Sergio Ramos. That's it. All right, 2 minutes out. 2 minutes out. Volume should go a bit crazy here. So let's just brace for impact. Again, holding some pretty nice levels. What you really want to see here is to reclaim our sell-off from last night. That would be a completing of the hedge. And if we could just get business as usual, something that looks like this, may have a trigger to go long. Same with ETH. ETH seems to be responding much better. What we really want to see is 39.26 reclaimed. This 200 EMA downtrends a bit, or trends back into our pivot. And from there, we have something to work with. What's up, Twice EU? So, Farhampton, after the news is released, right? After the data print is released, we usually have 30 minutes from now until when Powell speaks. And Powell speaking is where, we really get our intuition from, right? It's where we really get the lean. We want to hear more about what Powell has to say, because there is no debate going into this FOMC, right? So what we really have here is a one-sided general consensus that we are dropping rates today. That's not what people are speculating on. What they're really speculating on is what Powell has to say afterwards, and that's where the money is made. So we'll have a bit of time. Take a look at some legacies here. Let's see how they're responding. A weak dollar going into a pretty much obvious rate cut. So this is to be expected. We're 1 minute out now. So MicroStrategy, a day after the Citron shorts are closed or expired, or at least I believe them to be. How's SPX been responding? That's it. All right, and 2 o'clock has arrived, so let's see what happens. I am pretty sure we just got our rate cut, right? Oh? Do you mind releasing, please? Thanks. Come on. $25 basis points, right? Why is it taking so long to update? Yeah, 25. Very slow to update, but yeah. 0.5 basis points cut as expected. So again, this is not really what we're interested in. See how the tape goes. Let's see how it responds. Oh my God, it is just going wackadoodle, huh? All right. We need to slow this down a bit. One groupings are a bit wacky. Let's go to 5. No, that's not bad at all. It's as expected. It's as expected. Tape is going absolutely crazy right now. This should be bought up rather quick. I don't really see a reason. I mean, you got Binance clipping out 2 mil sells over here, so that's interesting. Binance is just unloading on us. So that's very interesting. Do we have a Coinbase buyer? The worst case scenario you can expect from this meeting is that instead of hearing the usual Powell mumbo jumbo sweet nothings, he takes some sort of political stance, right? Again, for the past 4 years, every meeting's been exactly the same. And then, you know, all of a sudden now we have a new administration. Anything that would sort of change his tone, his demeanor, would come off as pretty odd, pretty bizarre. And again, it is the last meeting we will have with this Biden administration, right? So again, big changes from now until next month. So his words are important. I don't think he could say anything that would take us off course, but hey, stranger things have happened. But I assume this would be bought up rather quickly. And is there anything else I can consider here? Interest rate projection, higher across the board, so that's interesting. So that's pretty interesting. And how did the dollar respond to this? I'm curious. Yeah, right. How does that make any sense? Oh boy, what a candle. That's a clean range break. Yeah, we have our eyes on ETH BTC here. Specifically ETH, it's held up significantly better. Dominance is plummeting from the 58 to 60% zone here. So naturally, if you can expect a rejection from here, ETH should be in the position to outperform. The problem is, if we got a weak Bitcoin here, it's going to be kind of problematic for the rest of the market. But let's see. Let's see. Trying to get a read over here. I'm going to have to go into bigger groupings. Stacked to the gills, stacked to the gills. So again, buyers are present. Bitfinex is causing most of the disruption here. Pretty stacked up here. 77 wall there. Mick, no way you subbed to me. No way you just did that. When POC indicator? I have it right here. It's right in front. And the best part is it's free. All right, so some alts are holding up pretty damn well. I can't lie. It's not as bad as a bloodshed as you would expect. Jamie, no way you subbed too. What's going on over here? Did you guys just hype train me? All right. You guys hype train me. You know the drill. You know the drill. I'll see you guys in just a minute. In the middle of my conversation, you guys sent me to the closet. There's no way you guys just did that. There's no way you guys just did that. Gosh. You guys have no respect for me whatsoever. Thank you for the subs, my boys. Chad be chilling. No way you subbed too. You subbed while I was in the closet. There's no way. Tell BDC to stop doing the stinky. Well, we don't have a pivot 200 EMA to work with here. So we got to do what we're given. Obviously, I'd like to see this before we can get long, but hey, we wait and we wait. But if we can hold these lows, we're good. Just try not to get shaken out. What we're looking for to get long on ETH would be something like this. Until then, we have nothing to touch. The only thing we'd really touch is 37.28. So just chill for a bit. Let this first 15 minutes go by. A lot of trading activity. Liquidated a bull at 2.6 mil here. So that's good. Let's take a look at the liquidations. I'm curious. Mahmoud, I'm going to try my best. We only get an FOMC once a month, right? So we try to make it fun. Do I have any thoughts on the RWA sector in general? Not necessarily. Not necessarily. If you have something you want me to take a look at in specific, I can do my best, but... Okay, so liquidations really aren't that crazy. Barely any liquidations at all. 360 mil. I mean, actually, you know what? That's quite a lot. That's quite a lot for 24-hour period. I mean, it's nothing in comparison to what we've had before, but... We'll take a look at some stuff in just a second. Thank you so much, Jules. Appreciate you. You think they're going to sweep 103K? I don't know, man. I don't know. Again, if we're just going to have Coinbase start bidding up like a bunch of animals, we need to be realistic. I don't think it stops at 103K if we actually manage to break this, so... I think we go a bit lower than that, but hey. I would assume we're back at like 100K if we can't find support here, so. Dominance rejecting from 58. So again, any sort of bounce that we do get is going to be quite interesting. More profit taking across the board based on these metrics. ETH BTC wants to play, but again, if the market wants to go risk off into Powell's speech, which I guess makes sense. He's probably going to talk about the higher projected inflation. So we're just going to have to wait and see here. I am probably eating some L's here if I continue. Got to be a bit cautious here. I want to get back all my profit, yeah? I've been holding this trade for a while now. 460, I mean, we're good. I mean, maybe we'll set a stop at around 100. Hedge funds are just simply selling and enjoying their vacay while we stare at charts. Yeah, you know, like this is well, you know, don't get it twisted. They're waiting for Powell's speech and then they go on vacation. I assume that's the playbook. You're gonna get some tax selling, etc., etc. Volume's gonna die out, slow down. It's normal. It's Christmas holidays, right? Not a good response from the market thus far. And what about legacies? Oh, they do not like these higher projected. They do not like the higher projections. That's a fact. Not a fan of that. So we're most probably going to get like some Powell mumbo jumbo about how they're not meeting their targets anymore and they may need to slow down. That's what I'm assuming now. Shorted gold this morning and I'm banking. How much is it down? I haven't taken a look. Zhao, where are you? Very nice. Nice breakdown play. For a TradFi short, that's not bad at all. Been downtrending pretty hard though. Yeah, we're going to get real direction from the Powell speech. I agree. down 20%, but full liquid. What do you think the best play to do? I think we need to hear from Powell first. We already have our expectations met. The market doesn't like it. I think they're a bit more concerned about higher projected rates, right? So again, we're probably going to hear Powell talk about something saying, inflation's not actually where we want it to be, and we're seeing a shift and yada, yada, yada. The Powell mumbo jumbo. We got to look out for that. So it's either you hold these lows into Powell's speech, which is going to be very, very important. We absorbed the selling. We ran some liquidations, but realistically, do we have much else hiding anywhere else? We're going to have to take a look at some rates here just to see some incentives. I mean, man, we're below 0.01. Realistically, how much more is there to hunt? ETH starting to go back to 0.01. XRP almost predicted negative incentives. Sol almost completely flushed out. There's a lot of optimism here. There's not much leverage in the system. So whatever comes from this is strictly spot selling at this point. Not much to target. The only thing you can target is panic. Could we see 97K again in BTC? Absolutely. Absolutely. I wouldn't put it past you. I would not put it past you whatsoever. I would say anywhere from this box to the 100K highs, 108K highs, or maybe even 110, because that's really where the fighting is going to be. I think anywhere between here and here is fair game. I wouldn't even be surprised if we kind of like range like this. I'm not even kidding. That's a bit optimistic, but let's see. Just don't consider this low always as a potential area to trade back into until we can make like a clean and decisive break, like a clean gap up. Just assume you're in some sort of vertical range. What's the line thing I use? Are you talking about my pivots? These are the settings. It's pretty much just a pivot point standard with a Fibonacci on it. I don't tend to use them on a daily. I use them more for my 15-minute intraday strat, but they work very well. What does he have to say to turn the market in a negative direction? I think a market likes certainty, right? They like to hear that the Fed is in control and they have full understanding of what's happening. It's the second they do one thing and say another. So really what the market wants is just a bunch of certainties. They just want to hear what they've always been told, sweet lullaby. They want business as usual because the rate cuts were expected. That's on the radar. What they don't want to hear is that, hey, next month might be different. And the way it's going is maybe we overshot our expectations. These are the things you don't want to hear. A lot of people are going to say, oh, it has to do with the administration, et cetera, et cetera. You get what I'm trying to say? Like we just want to hear what we've always heard, and then the market will play to that hand. Again, if we do manage to sweep this level again, albeit it's getting weaker and weaker, but we do have interest at these levels. So again, someone's holding it up pretty damn well, chasing his wall now. Yeah, we're going to stream the speech. I'll go a bit quiet. We'll listen to his original speech, and we'll make comments with the questions that come along, and I'll do my best to interpret it for you guys. 98, 99K would be a great opportunity for swings. Yeah, that's the thing though, right? We're in a very competitive environment right now where we have people injecting billion-dollar buys over the weekend, even on low volume, and we can't seem to get that ideal pullback like we're so typically used to seeing. So again, we get too stubborn, we miss an opportunity. We get too careless or too complacent, we're too early to the idea. So again, it's been tricky. It's been very, very tricky to get a position on BDC. Do I think we're going to 4.5K on ETH? I think that part is inevitable. Again, it's not about leveraging your bet here. It's about just having an overall conviction on the idea, right? I think everybody's expecting that. It's a crowded trade. The problem is, you got to let spot demand do its thing. So the positives on ETH is that it does have ETF inflows and rather large numbers of it. It's going to take some time, but I think yes, it'll get there. I think 45 is rather conservative, but yeah, it's not about these max size bets and getting lick hunted. It's just that's the issue right now with alt markets, right? Is that just a lot of people feel entitled. They keep slapping leverage. They keep trying to make it on a borrowed position, and spot, you know, calls the bluff on that. Just allows them to buy back much lower. So again, the level I'm looking at for here, it's either 39.26 is reclaimed, and we can assume this is going to be risk on into 4K, or we look for the mean reversion at 37.28, which I understand, you know, might be a bit depressing for you, but it's a level I have, and it's a level I enjoy. So I'm looking forward to it. So for anybody that's new here, I typically operate on the pivot 200 EMA. Sorry, not this. Call this. All right. What I typically operate on is an aligning of the 200 EMA and my pivotal level. A flipping of that level can suggest, you know, exhaustion on the sell side, usually pushes up strongly, or an S3 mean reversion, which usually hunts the stops and liquidations of whoever's bidding this area, right? So ideally, we look for a trade that looks like this. Look for these two take profit targets, and if we do manage to get the reclaim, we look for these three take profit targets, right? Assuming the risk to reward is viable for us, lucrative enough, we take the trade. So we look at two things. Usually I don't trade the S1, S2 levels. It's a no trade zone for me. It's usually indecisive, rather choppy, as you guys can see. And for BDC, naturally I would trade this S3 level, but given that the mean reversion happened overnight into the two levels of interest I typically have, I'm off limits and risk off for now, so I can't really trade this yet. And that's how I'm seeing it right now. So again, we just need to be a bit patient here. It's the name of the game. We're 13 minutes out until Powell speaks, so not much longer, and we'll get to hear what we're here for, right? Started Naruto weeks ago and just started Shippuden today. What an anime. I've heard a lot of good things about it, but I haven't watched it yet. I've heard a lot of good things. Osbra, this is a pivot point standard. This is a pivot point standard. So again, this is how you would spell it. Right? Click on this little thing. I'll even favorite for you. And these are my settings. So automatic, so that they fit every time frame. Number of historical pivots is back to 1, because if I do 5, then it gets pretty wackadoodle. I don't really care about the other intraday levels. I just care about the day of today. So I usually put that to 1, and I stick it to a Fibonacci because, you know, in a price discovery market, this is what I choose to look at the most. I don't technically use Elliott waves. I understand that they could work very well in legacies, because legacies have years and years and years of data. So like if I go to like the SPX, right, we have years and years and years of data that we could reference to determine, you know, real wave structures. I used to tinker with it. I used to tinker with it in the crypto market, but I find it moves way too fast. There's not enough data for me to use it. So instead, because it's such a speculative, volatile market, I tend to just use, you know, typical order block supply and demand. And I find that works so much better, but that's just me. All right, and they are definitely shoving this. It's coming from Binance. Running some liquidations now, so let's see. What else do I want to take a look at here so we have a better understanding? Yeah, okay, we're running the liquidations over here. So just about down to about 102,500. Let's see if we get it, because this would be the pocket to target. Run through that all the way down to like 102K. There's no way we hold this, right? ETH as well. This is where we can see a pretty big structure break here. If USDT DOM doesn't want to continue up here, that means the speculation continues. Let's see. 10 minutes out, 10 minutes out. We almost absorbed all the FOMC trading. Seems more and more likely that this might be the fake out. Which crypto can I buy now? Always buy Bitcoin. It's the only one I'll ever shill on here. BDC. Do I have an open position? I have BTC open. Yeah. Oh, almost 69, 420. Very close. But again, I've held this trade for a few days now. I don't usually do that. So again, if we're just gonna lose whatever low we have here. What about Solana? I'm watching Solana. We have a very, very similar setup towards 221.20, right? So it's the same way I'll approach, especially on an intraday. The same way I'll approach this is the same way I will with ETH or BTC. You have a pivot 200 EMA aligned. You would like to see 221.20 reclaimed in order to have an assumption that we could revert to the upside. If not, you look at 203.44. Is the dot plot also already leaked? What does this mean? What's my final target on BTC? One sec. We'll get to that in just a second. What's up, Hossy? Thoughts on meme coins? Just how long can they survive? Pudgy Penguins at some point might be zero, right? Look, do not underestimate mass FOMO for whatever reason. You know, you can have like an overall assumption on them, but realistically, when you know you're in front of a train and mass buying, it's very, very difficult to predict when that can stop. The thing about meme coins, right, is that they no longer try to hide the fact that they don't do anything, right? It's community, it's brand, and people are okay with that. So again, they know what they're buying, they know what it's capable of, they know that they're there to make money on them. Some of them don't even actually care about that at all. So again, it's not like a realization that, oh my God, these things are useless and I need to get out. It's just, it is what it is. So again, if there's volume, there's demand, you can trade it. I'm not going to be the one to try and call tops on stuff like this. It's one of those environments where like people have finally accepted, right? That no, they're not meant to solve world problems. They're not meant to do this. They're just meant to be speculative community coins. And again, if they're still willing to buy, I mean, I don't think I'd get in front of that. La Luna with the sub are my man. What's going on with these subs over here today? What's going on with the subs? I'm freaking out. Thank you so much. And it's good to see you. Yeah, it looks like fading the initial move is the right move for now. Yeah, we have to assume that if we just pushed all these sells and this is all we could liquidate, that there's really nothing left to liquidate. That's how you have to see it. There's nothing really left to liquidate. So whatever is being forced down here is panic, right? If I go check my rates, right, like I don't see much to liquidate. And we're about 6 minutes out. Does anybody have the link for Mr. Powell? I think we might survive this. Yeah, the open interest indicates to me it's more short because we just ran a bunch of stops and then didn't seem like much. So let's see. Perfect. All right, so we got that ready. 5 minutes until he starts speaking, right? So again, you'll hear me shut up pretty soon. So I'm getting a lot of comments. If I miss some, I'm very sorry, by the way. Final target on BTC this cycle. I think it's, you know, I think a lot of people underestimate how high this thing could go. I'm hearing targets of 110K, 120K, 130K. This is a top for ants. In true parabolic fashion. This is not a parabola. It's not even close. It's not even close. We didn't spend 7 months ranging sideways between 50 to 70K to sell to you up here. It's nonsensical. It wouldn't make any sense. We're talking billions and billions and billions of buys stacked up over here. I don't believe it for a second. My targets are more towards, I don't even want to say it because then people are going to meme me, but like I would say it's in the 200K plus area. But that's an opinion. You know, it's not financial advice. It's an opinion. Maybe slight bias, but you know, that's my real belief. We've never had interest of this magnitude. looking better, but we're not out of the woods yet. So just chill out for a sec. Yeah, there's always gonna be a lot of apes to liquidate, but like realistically, I see a lot of other things that I'd be much more comfortable running some stops on. You get what I'm trying to say? Is S3 in play? No, unfortunately not, because we technically, whenever we play an S3 mean reversion, it's exactly what it stands for, right? A mean reversion. So again, if it continues to come back here, I see it as weaker and weaker, and it shouldn't come back here. If it's going to fully recover, it fully recovers. And if it's just going to be weak, well, the whole point of playing a mean reversion is you get the first initial response off it. That's how you know you can exit rather quickly, right? And then you get a continuation play above, and then you can long again. Like we don't want to take it again because it becomes unreliable after. We're much more comfortable, revisiting here. In the event that it goes back down even more, we don't want to stick around, right? But in the event that it does go back up here, then we can assume the drop is completed, and we can just look for a relong at our pivotal flip, right? Again, I'm not in the business of bottom ticking. I'm in the business of just finding setups that through my data, through my system, tend to respond very well. But I'm very, very happy if we hold these lows. But unfortunately, because this is already played out, I can't take it again. It would just be bad practice. Krotoru, I do have in the Discord, I have like a workshop, right? I've done like, I think 7 or 8 episodes now that cover my pivot strat, that cover my risk management, sizing, exiting, etc. So again, if you are in the Discord, give it a look. It should be in the education section. They've been very, very according to some, it's been very, very helpful. So short setup somewhere. I mean, it's your own peril. I'm in a bull market. I don't really look for net short plays. I'd rather just, either stay flat, look for an area to buy lower. I don't like to be net short in price discovery. It's not too much fun. I mean, I look for areas to hedge up instead. And in this case, you'd probably look for the pivot 200 EMA to be a sign of resistance. So it would have to look something like this. It would need to kind of roll over type thing, right? But again, that's not really what I'm in the business of in price discovery. It's better to just look for the better buying opportunity. You think Sol looks really good? I do too, but again, instead of betting on this, while price does realistically nothing for me, I have 2 levels of interest I do like, and that's either towards 203 in case this area doesn't hold out, and towards 221.20 in case this area does hold out. I'm willing to take the haircut. I'm willing to get my confirmation, and I'm willing to target into these 3 price points. So again, I try my best to avoid the retail chaos. I find it kind of annoying. Chops you up a bit too much. Opportunity cost. You can't have eyes somewhere else when you're too busy focused on price doing nothing. So we're gonna open up this over here. We're gonna turn off the music, and I'm gonna go mute, or very, very quiet at the very least, because now it's time to hear Powell speak. So let me know if the volume, if you guys can hear it properly. It should sound like an employee training music video. Perfect. I'm too bright, I know. Look at this, making me look like a ghost. All right, I'll answer all the questions later. Now we have to hear Consort Radan come out and spill the beans.
colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Pretty much the same shit we hear every month.
Gina Smilik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why
This microphone.
officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of now 2 cuts next year compared to 4 in September.
He's pretty much saying what he always says, so
Howard Schneider with Reuters, and thanks.
Pretty much a
for the
nothing burger.
opportunity to ask a question.
Oh, is this Rugged Bear?
This does seem similar to the dynamic in 2016 during
No,
the
no, it's
last
Howard Schneider.
transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this. Some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside.
Oh.
The only real thing that's happened is November 5th in the meantime.
Oh.
Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation, September and October.
He's getting nervous.
As I
He's
mentioned,
moving his
November
hands.
back on track. But once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
Oh, Chris Ruggabear.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the
Yeah,
question.
he tried to pronounce it. Chris Ruggabear,
In
bro.
September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs.
Instant
as long as
20
there were
mil
one-time
buy
increases
when Chris
and
Ruggabear
inflation
shows up.
expectations remained
Crazy.
anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work. All of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow-up. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants
Oh,
today
not this
revised
guy,
up
bro.
their core PCE inflation projection for 25, so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, What would compel the committee to be cutting in that situation?
Let me find these numbers. So we have
You see that woman in the background who's like giving him like this? That's crazy,
inflation coming
dude.
down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but it would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement,
girl in
which
the
has been
background.
used at times in the past,
It's like,
when
fuck
the
this
committee thinks
motherfucker,
maybe
man.
it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And I would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
It's pretty much business as usual, guys. Like
Michael McKee from
what
Bloomberg
you're
Radio
seeing
and
more.
television.
Okay, before I continue,
Even though
I'll cover
you've
up.
cut
Okay.
rate-
What you guys are seeing more than anything is hedging into the holidays. Nothing here, what we're hearing is out of the ordinary. It's the same shit every month. We don't know. Take it month by month. We're on target for 2. It's all just hedging into the holidays. Don't panic. Stop freaking out. I see my chat freaking out.
The rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts, included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates, and we made, look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that.
Oh? They didn't like that question. They cut me off. Conspiracy. Oh? No way they did that.
This is inflation, which is one that we've really worried about. It really has come down now quite steadily at a slower pace than we thought, 2 years ago. But it's nonetheless steadily coming down as market rents, start to equilibrate better with, new leases that turn over. Not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. A good example is financial services, which is really done off of asset prices. And that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight. But overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22.
Man. My
for
Lord.
example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
Colby.
Thank you. Colby Smith with the Financial Times.
Oh.
So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might, if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So but you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think, you pointed out, participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market, and it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation's moving around by 1/10 every few months, that's, we'd have to weigh that against the fact that inflation has, in recent months, been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks of the two are, we think, are broadly, roughly in balance. And so that's how we think about it.
Steve.
Oh my God, they're still going?
Mr. Chairman, I did not hear you use the
Oh,
word
not this guy.
recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard is to look, those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Oh my God. Okay, guys. I'm going to get back to some questions here because I see you guys are very, very, very panicky. You guys need to chill, man. You need to chill. It's another day in crypto. How many times do we have to see the same shit over and over again? It's the same shit every day, guys. I see too many people losing their minds, guys. It's FOMC. It's volatile. It's the same shit we hear every single time. You guys asked me why I didn't take S3. There's a reason for that. You guys asked me why we don't look to trade either until we get 39.26 or until we get the S3 mean reversion. Why do you think that? Like you guys need to chill, man. It's just another day. It's another day. This is like literally our markets. I told you after FOMC, expect majority of participants to go risk off. It's pretty much how it goes. Holidays are approaching. Everybody's hedging their profits. Everybody's taking it. You have SPX at fucking insane new highs. People are hedging going into the holidays now. They got everything they needed to expect for the next month. These next 2 weeks, we're going to expect volume to dry up. It's like literally what you would have expected going into the holidays. They told us the same shit they always tell us. We don't know. We're on track. We take it month by month, etc., etc. Just let it do its thing, guys. Let it do its thing. I'm not exposed. My position's from 96K. I have stops way in profit. The only thing I'm really looking at is 37.28 on ETH. I said if we can't get above 39.26, we look for the S3 level. It's the same shit every day. It's the same shit every day. I have no interest in the secondary pairing market. None of it as of yet. We're really just looking at the majors. BTC DOM skyrocketing into 58%. But what's more important than BTC DOM is USDT dominance. This is more indicative of hedging into the holidays. It's officially the last macro event. It's where everybody's pulling the plug for the next 2 weeks. They probably don't want anything to do with the markets. They want to have and enjoy their holidays with their family. And for that reason, selling off for the tax season. It is what it is. It is what it is. Remind yourself how December of 2020 used to look. Remind yourself of how pretty much every Christmas holidays goes. It's pretty much the same shit. There's not really much I heard. We got exactly what we wanted. Exactly what we wanted. Like nothing out of the ordinary, not even close. Yeah, just let leverage flush. Just let leverage flush. Again, how many times do I have to see shoved positions on alts with no spot demand? None whatsoever. But slamming that leverage buy button, how many times do I have to see it? We will continue to take that money. You know, it's literally just let the market go risk off. Let it hedge up. Christmas is a week away. Most people are not going to be trading next week. I will not be trading next week. You know, it just let it do its thing, man. Let it do its thing. Holy volume, though. Holy moly, the volume. If it's time to run liquidations, now's the time to do it. Did I really just fucking...
with the action, with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high. Wages are at a healthy and ever more sustainable level, wage growth. And so the labor market, this is a good labor market.
Holy
and,
nuke, though. Holy nuke, though. Profit taking en masse.
Thank you. I'm Amira Mokway from Bloomberg News. I just want to put a finer point on the labor market.
I have not seen a tape like this in a long time, man.
In the strong position that you have described without further cuts. In other words, do you still view the labor
pretty
market
big nuke,
as
if I do say so myself,
to protect against a further cut?
Indeed.
You know, we can't know that with any tremendous certainty.
Fucking hell,
say
man.
that we think that our policy balances the risks.
Did he actually say that,
I think
though?
the risks are roughly in balance as between the two mandates. And we think the labor market
wanna take a look.
is in solid shape. And
Fed
when I
not
say
allowed
it's
to own
softening or
Bitcoin.
cooling,
Interesting.
It's a very gradual process. You know, job creations are meaningfully positive. Wages are, you know, if anything, a little still.
We
a bit
literally
above
missed the
what
highlight
would
of
be
this entire
sustainable if
FOMC. You're
productivity were to
fucking
revert
shitting me.
to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So
that sounds like bullshit, though. How
I
do you
don't
go
overstate
from
the
saying
downside
Bitcoin is a
of it
store of
in the market
value,
because
digital gold, to we
the
can't own it
downside
now?
Clearly,
That sounds like
appear to have
bullshit.
Diminished. Nonetheless, it's one of our mandate goals. And you know,
I
we
literally
pay close
stopped
attention
him
to
from
it, and
talking
it's
for
worth
2 minutes,
noting
and
that
he
it
said
is
something
still
about BTC. You
gradually
can't
cooling,
make it
gradually
up.
and in an orderly
You
way.
can't make it up
And,
sometimes.
you
You
know,
can't make it up.
That's how I would characterize it.
I'm
and
not
that's why
longing.
we're
I'm not
paying
longing the
careful
S3
attention.
level. My intraday targets are gone.
Thanks so much, Chair Powell. Elizabeth Schulte from ABC
Okay,
News.
we got our
As you
deviation.
noted, the Fed
We
is
got our
now
deviation.
forecasting higher
If we
inflation
reclaim
next year.
3728,
High
then yeah, you
prices
can go
are
for it.
still a burden for so many
That's what I would do.
households right now.
If you reclaim
Why do you think it is that
3728, you
inflation
assume that this
proving
is
to be more stubborn than
but
you
never,
expected?
never just limit in.
You know, it breaks down into a.
You see,
a
this
long
is
answer,
not
if
what
you
we
want, but
like. Okay, look. Instead of it going just as usual, for the first time ever, I'm hearing Powell start talking about our cryptocurrency markets. For the first time ever. For the first time ever. Over the past 2 weeks, he's mentioned it twice. See, this is out of pocket. This is away from what the Fed typically says. This is away from how the Fed usually acts. It's like these politically charged phrases and statements, knowing that the next administration clearly has plans for a strategic Bitcoin reserve. What does he do? Says something the complete opposite out of it. This is exactly what I was talking about, where we wanted him to just keep a non-political side when it comes to this, and he literally just spilled the beans. So you see, an otherwise perfect meeting just turned to shit. Being completely honest with you guys. Something that he shouldn't have said anything about. He finally said it. He finally said it the one time out of all the FOMCs I've ever watched where I muted it for 2 minutes because I saw people kind of freaking out. He finally mentioned Bitcoin. You cannot write a better script, and I mean that sincerely. You cannot write a better script than that. But I'll be damn sure that we just ran the liquidations. I'll be damn sure of it. If they were looking to liquidate whatever was on the board, they just did it. That's with a certainty. That's with absolute certainty. I cannot believe it. I cannot believe I turned off my press conference for 2 fucking minutes and he mentioned Bitcoin. I am actually in disbelief. I am actually in disbelief. I am actually in disbelief. No way. There's no way that happened. Whatever, man. Yeah, that is nuts to me. That is actually nuts to me. I can't even lie to you.
Or people's good feeling about the economy.
He said that the Federal Reserve cannot
As we look ahead to next
own
year, what do you
BTC.
see as the biggest challenge to the economy?
Conveniently
under
going
this administration?
against the new administration that's coming in next month. It's you can't make it up, man. You can't make it up. He didn't say anything that went against the administration for the past 4 years. Now that there's a new administration, all of a sudden he has to mention something related to the new administrations. He's never done that before, and now he did
Thanks,
it.
Chair Powell.
You
For the
cannot
questions,
make it up. You
Edward
cannot
Lawrence
make it up.
from Fox Business. So you say that we're closer to the neutral rate. What percent do you see, and the committee believes, where is that neutral rate?
You have to understand. I understand he's stating a fact,
I'll say a couple
but
things.
they've
First of all,
never,
when
ever,
we-
ever.
When we write the thing we write down.
They've
in the
never.
summary of
I'm
economic
not
projections
panicking.
is
You
the
guys are
longer
retarded.
run neutral
I'm
rate,
saying,
which is the
in all my
neutral
4
rate
years of
at a
covering
time
every
when
FOMC
supply
live
and
on
demand
stream,
are imbalanced, the
you've
full
never,
economy is
ever, ever
imbalanced, and
taken
no
a
shocks
stance
are
like
hitting the
that
economy.
ever in my
That is
life.
not where we are right now. So
That's
when
all
we're
I'm trying to
making
say.
Monetary policy at the Fed.
You see me
That's
panicking?
not
Did
the
you see me
question
close
we're
my
asking. So
position
you
in
can't
front
do
of
a
you?
straight
Not
read
even.
between
I'm
the
just stating a
longer
fact
run
that for the
numbers that we
5
write
minutes
down and what we think
I
the
chose to
appropriate
not
policy
listen
should
to
be.
him, he finally
So
mentioned something about
basically,
my
at any
industry.
given time, various shocks are hitting the economy. And
Show me
so
the
what
link.
we're doing
Show me the
in-
link
in
where you said it
real
before.
time is we're looking at our policy
Show me the link
stance
right
and
now.
we're
I want to
looking
see
at
the
way it's
link
hitting
in
the
front of my
economy,
face where you
and
said it
particularly
before.
we look
I've
at
been
the
watching
effects it's having as we
FOMCs
try to
since
move the economy
2020.
toward maximum employment and price stability. And the answer
I want
can
to see
be,
where you said it during the
there
2021
are things that
administration.
affect
I
the
want to
economy that
hear
are-
you
that are
say that. I want to
lasting,
see the
but not
clip
permanent.
from
And the
2021
ones that are
Biden
permanent are the
administration
ones that would be
up
in our
until now.
star.
I want to see the
The
clip.
ones that could be lasting, but nonetheless go away over time.
A
they
first-time
can actually
chatter comes in
affect
here
what-
and tells me what
what's sort of
I saw
technically the
over the
appropriate
past 4
neutral
years.
stance in near term. So we're looking at that, and we don't know exactly where it is. But as I like to say, we know it by its works.
It's unbelievable.
And I think
I-
what we know
it's
for sure
unbelievable.
is that we're 100 basis points
I
closer
closed
to it right
his
now.
speech for 4 minutes.
There are many estimates
And
of
he
where that
mentions
might
my
be, and we
industry
know we're a lot
for the
closer
first
to it,
time
and
ever.
I think we're in a good place. But I think
No
from
way in
here,
hell.
It's a new phase. And
Yeah.
we wanna be,
He said
cautious
last
about-
week or 2
about-
weeks. But
about
again,
further
guys,
cuts.
ever
I
since
think the
November
markets are looking
5th,
for-
ever
for a
since
little more
November
clarity. I mean,
5th,
I've heard
since the
estimates from 2.9%
Trump
to
administration
4%.
won,
You know,
all
I
of a
think
sudden
the
Powell
markets
has an
would like to
opinion
see
on
a little
stuff.
more clarity about a year out, 18
I've
months out
never
as to
seen
where
him
that-
do this in the past
goalpost,
4
for
years.
lack of a better term, is because at the moment it looks
Now that there's a
big.
new administration,
Yeah, I mean,
conveniently,
honestly,
all his
there are
opinions started to change.
countless
I'm not
models
the
of
only
what-
one
of
to
what a
notice
neutral
this.
rate
I'm
might
not the
be at
only
any
one
given
to
time.
realize
There are
his last
empirical
meeting
models,
was
there are
rather
theoretical
bizarre.
models, there
How
are
all
things
of a
that
sudden
combine
you
them,
drop by
and they
0.5
have
basis
as many
points,
different answers as you'd like.
0.25
So
again,
there is no
Trump
real
wins,
certainty.
and all of a
And I mean,
sudden inflation's
it's
not
actually
where
a
you
good
need
thing
it to
to
be.
know
I've
that we
never
don't
heard
know
him
exactly
say that
what it
before.
is. So you're not tempted
It's
to think,
only
"Oh, I
ever
think this
since
model or this
they've
estimate
announced
is
a
right."
new
You just have to
administration.
be open to
That's
you know,
all
the
I'm trying to point
empirical
out.
data that are
I
coming in
notice
and also how
patterns.
it's affecting the
I do
outlook.
it
And
for a
it's not
living.
made any easier by the fact that
I
there are
literally
policy
do this
works
for
with
a
long
living.
variable
When I'm
lags.
telling you,
Nonetheless,
ever
that
since
is
the
job
November
we
5th
have.
inauguration,
And, so I
inauguration,
think we need-
debate was
it's
declared.
appropriate for us now to proceed
Debate.
cautiously.
Ever since the
Now that
election
we're
was
100
announced,
basis points
all of a
closer
sudden,
to-
Powell has
to
a
neutral.
strong opinion
And,
about
we'll
certain
do so.
things and how they
Meanwhile,
work.
The economy seems to be
I am
in good
stating a
shape,
fact. I've seen it
and
with
these
I've
cuts
seen
will
and heard it
certainly
with my
help
own
to
eyes and
support
ears.
economic activity and the labor market.
And again, he did it
While we
again.
can
The
still
last
make
meeting
progress
before
on
the
inflation because
inauguration, he
policy's
had
still
to make
meaningfully
a
restrictive.
very, very specific stance. He usually avoids the topic of crypto like you wouldn't believe.
Hi, Victoria Guida with Politico.
He avoids crypto. He doesn't
just
even
wanted to
pretend.
make
He
sure I
pretends he
understood
doesn't
what you
hear
were
it.
saying at the beginning about
But now that
inflation.
this
Are you saying
administration
that
wants to move forward with a
progress on
strategic
core PCE
reserve,
counts as
he
progress
mentions
on
it.
inflation, even
It
if
seems politically
headline
charged.
inflation
It's exactly the
ticks
thing I
up?
didn't want to
And
hear.
then
It's the
also,
one thing I did
since
not
that's
want to
what's
hear.
projected in the SEP, I was wondering what accounts
That's
for
all
that?
I'm mentioning.
Why do
And
you
it just
all see
sucks
core
that we
PCE
didn't get to
going
hear
down
this
and,
live because I took 5 minutes to assume it was going to be business as usual.
headline inflation ticking
And
up?
he threw a curveball at me for the first time in 4 years.
You know,
I've never seen him go on this long, by the way. Like it's this is a long meeting. Like I'm almost bored.
Core inflation, they experience inflation, and that includes food and energy.
Yeah,
costs.
I've never
that's the
never
overall
seen.
goal. But as we know,
That is crazy. That is crazy.
headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation.
Yeah,
So it
calling
turns
them
out that
specifically
core
speculative
inflation
assets
core
and stating
is better
as a fact
predictor of
that they
overall
cannot,
inflation
like you
than
said,
overall inflation.
your
So we
words,
look
not
at core
mine,
inflation
that they've
because it's a
never
better
ever said they
measure
cannot
of
legally
what
own
future
BDC.
inflation is like to be likely to be.
Jamsful,
because it's
you
a
come
better
into my
measure
chat as a
of
first-time
what
chatter. I have
inflation
no idea who the
pressures
fuck you are.
exist. So that's-
But you're going to
that's-
tell me
it's
what I've
complicated,
heard and
but
what I've
ultimately
documented. I
you
have
know,
all the
our goal
VODs.
is
I have all the
headline,
VODs. You
not
can't
core.
argue with me.
So your question
But I know
was-
you're
your second
you're a
question
troll
was what?
and you're going to do what you
Why
have
do
to
you all
do.
see core going down, but headline
But you're not going
potentially
to argue
ticking up?
with me.
So
So
headline can
again,
be affected.
a mention
you're talking
saying
about
something
next
that
year.
is a speculative asset. We all
So,
know that.
Headline
We all
again,
know
can be
this.
affected by energy prices.
What you're
and
saying
food
is not
prices. So
revelation.
that there will be things in the headline forecast that are to do with.
It's just crazy. It's crazy.
forecasts
That's
of
all I'm
energy
saying.
prices,
Is ever
whereas
since the
core
November
will be
5th
core
new
going out
winner
a
was
full
announced,
year,
all of a sudden
then it'll be
Powell
much
has
more
very,
driven
very,
by
very strong
things like
opinions
tightness in the economy.
about certain things that he otherwise didn't have for the past 4 years.
Why the two can go in different directions.
That's it.
Headline has been lower, as you know, most of this year.
And
That's
yes,
because
tell me
energy
good luck.
prices have
Tell
been
me good
coming
luck.
down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy
So
prices?
we monitor geopolitical risks really quickly.
Man, are we
but,
still- This is the
really
longest meeting
carefully,
ever.
rather, But
Usually it's done by now,
you know,
no?
I would say so far those risks haven't really. Nothing has come out of those risks that really has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, and but that is a good summary statistic for the kind of thing that could go wrong.
You wanna know what's ironic?
With global
You wanna know what's
turmoil. The
ironic?
price of oil's been coming down.
Is that while
And,
everybody's
for-
saying
because of
that this is a
supply
panic
conditions,
sell, the
global
blah, blah,
supply
blah,
conditions. So,
you have dominance
you know,
rising
the
in
US is not
influence, which
feeling
means on this
the
drop,
effects of
people
geopolitical
buying.
turmoil, but We are certainly at a time of elevated
That's the
geopolitical
craziest thing to
turmoil,
me,
and
honestly.
it remains a risk.
That's the funniest thing, is that the metrics tell you otherwise.
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to
Bro,
go back to
he's
something that
still
you
going.
said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of course. It's partly why Americans haven't felt much relief in their wallets from prices yet. But with inflation
I'm not crazy,
ticking
right? This one's
up,
been going on
how
for a
worried
while.
are you the progress in closing that gap could go away?
Yeah, So inflation, again, we don't overreact to a couple of months of higher readings.
Yeah, I'm reluctant when you guys tell me you're buying stuff because I probably wouldn't agree with you with what you're probably buying. That's what I'm a bit worried about.
November is much lower, so I don't really.
I haven't
think
made a
the
decision
public
yet.
Is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are.
Who called us today that they said that everything to put
the past inflation.
Trump in office with a black swan? I swear to God, I've never heard him with this sort of tone. I've never heard him with this sort of tone.
Your real compensation.
When you
is
really
growing,
think about it.
and in other words, your compensation is growing meaningfully faster than inflation.
Unbelievable.
That's exactly the kind of
Unbelievable.
economy we
He
have
knows
now.
the power of his
And
words.
we just wanna
He
hold on
chooses
to it.
them
That
so
process will probably take some
carefully.
years, but
This entire
that's
4-year
what's going
period.
on right now.
And the
I don't
last
think
one,
that
the
they-
last meeting
a couple of
before
months of
a
higher
Trump
inflation really
presidency
signal,
is sworn in,
that anything
he says
of the
everything
nature
that
you're
you would
suggesting.
consider to be
Just one follow-up.
completely
Let's
unorthodox.
look more long term. You previously predicted hitting the 2%
So,
inflation target in 2026.
at the
It's
very
now been
least, we
pushed
had a
out
very,
to
very entertaining
2027.
meeting.
You
A
said
very,
you're
very
focused
entertaining one.
on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't?
This is the
going
most
to move
entertaining
further
FOMC we've had in a really long time.
But when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty. Very high
Thomas
uncertainty.
Coco with the fucking
we really-
words.
At that point, it's not possible to confidently predict where the economy is going to be in 3 years.
See, look.
So what we're doing
Now
is
all
we're
of a
looking
sudden,
at what's
he
happening now.
it's
We're kind of
crazy.
projecting that
It's crazy.
The same kinds of things are happening. So we keep a
They do
strong
not
labor
like this guy
market.
coming into office. I
Housing
hear it in the
services
demeanor.
inflation
I
comes
hear it.
down, goods inflation settles down, and non-market services return to.
Well, we
their
liquidated a lot of
level.
shit. We ran a
Those
lot
things
of
should
liquidations,
happen over
boys.
time, and those pieces come together.
You get the
There's every
reclaim
reason to
here.
think
This should be a long. You get the reclaim here. BDC off limits for me today. We already played the S3 mean reversion. We got nothing else on this chart to play. Dominance skyrocketed. Now it's dropping.
Nonetheless, we're still.
You
on
get this
track, and,
reclaim. This should be our long. This should be our
2 years ago, you'd
opportunity.
said we were at 4.2% unemployment and 2.8% inflation.
I'm telling you, he went off script. I'm telling you for a fact. He's never, ever made harsh comments on specific sectors, ever. It's always about inflation. We're adjusted. We're committed. We're committed. We're committed. Never fucking says a statement like, well, we can't legally own BDC.
Hi.
What do you guys have?
Nancy
Capo on
Marchbanser
alerts?
From Marketplace. You said a couple times inflation has been moving sideways.
Oh, God.
Appears to be settling in around, 2.5%. Do you think the Fed is
Just nuke it all. Nuke it all. Oh, my God. Nuke it all.
that you're not going to get to your 2% target?
Get her out of
We're
here.
not going to settle for
Just
that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but it's you have to be.
AJM, no way you
we are
said that.
making
There's no
progress.
way you
We have
just said
made
that.
A great deal of progress, and we'll continue to do so, and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome.
So we
I
got
think we're at
everything we expected,
4.3%.
and all we had to do was hear Powell say,
meaningfully
"We don't know
restrictive,
month
and,
by month." No,
I think,
he fucking
it's
sabotaged
a
us all.
well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor
Unbelievable,
market.
man.
So-
Unbelievable. The one meeting I go, I think I understand what comes next. He throws us a curveball. And then he tells us to go fuck ourselves. That's crazy. That is crazy. Guys, that is one of the craziest FOMCs in the past 4 years, if not the craziest one since the rate increases. That was insane. It was unprecedented. I know for a fact nobody expected him to make a blatant statement like that. It's out of his character. I don't care what anybody tells me. I've been watching these for too long. That's the first time he's ever mentioned such a harsh statement on a specific asset ever. So again, that's out of left field. That's for sure causing panic in the market. There's no doubt. But if you think this is exclusive to crypto, it's not. It's exclusive to the entire market. Again, I think I saw a couple of tweets talking about how the only way to disrupt the Trump presidency would be a black swan. And again, I still don't believe it, but it's the makings of one. It's the makings of panic in the market for no fucking reason. That's pretty insane. That's pretty insane. It's the first time I've ever heard him take such a harsh stance in a certain direction in my life. So again, what do we say from here? Racky, I can't believe you remember that. XRP like pumped like 50% in a minute. And I got so excited, my coffee flew all over my desk. Look, I still think this is bullshit. I still think it's a buy the dip until proven otherwise. You're in a bull market. The words of Powell will cause panic, will cause some movement to induce positions to be closed. The reality is this is the last FOMC until a new administration sworn in. People are on edge. They didn't want to hear that. They don't like uncertainties. They don't like uncertainties. That's the last thing they want to hear. And all we got was uncertainties and a specific claim towards our market when just a week or two ago, Powell speaks positive about Bitcoin as a digital store of value, complete and total fucking contradiction, knows exactly what he's doing. It's whether they state a fact or not, know exactly what they're doing. Pretty ridiculous. Pretty unprofessional. I will state that. Extremely unprofessional. So again, with that, you're having holiday hedging, tax selling, a lot of excuses for people to hedge up. It is what it is. We take it day by day. What do you mean I'm making shit up? I'm reading exactly what I'm reading exactly the statement that was said. When did I say BTC is shit? What are you talking about? Are you fucking retarded or what? No, he said the Fed cannot legally own BTC. If you're going to try to correct me, at least have your shit in order. You're kidding me, right? No. He's not a troll. He's been following me since 2021. Since November 4th, 2021. Impressive. He's not a troll. He's serious. It's just, if you're going to try to correct someone, you better be correct about what you're correcting someone on. Powell said that the Federal Reserve cannot legally own Bitcoin. Word for word. That's exactly what he said. Where the fuck did I say BTC is shit? When what? How do you think I am bearish for stating what Powell said? Is this not bearish to you? Is the entire market bleeding 4 to 5% not considered a bearish statement? There's no way. I'm being trolled. This is not bearish to you. This entire drop in the market right after that statement is not bearish to you. It can't be. Because TradFi is nuking. No, definitely not the fact that we completely turbo nuked exactly as that was said. It can't be. I can tell I'm talking to trolls right now. And you're a really good troll, by the way. You baited me super hard. I haven't been streaming for a while, so usually I read right through you guys. But that was well done, my friend. Well done, because it's either you're brain dead or you're trolling me. So I'm going to give you the benefit of the doubt, and I'm going to assume you're trolling me. Yeah. It's either extremely low IQ or I'm being trolled. And I like to think, my followers, my chatters are way smarter than that. So I'm going to assume they got the better of me and they trolled me. Hats off, actually. I'll give you the hats off. You got me. And that's that. Yeah. That was a good troll, Boomer. I should have known. You've been following me for like 3 years. I should know you've been trolling me. But guys, that's the end of our stream. Let's be honest. We haven't had one like that in a long time. I've been buying BTC, whether it's at $60K, $800, $105K, $108K, $106K, $100K. I'm being told I'm bearish on BTC. That should have been the takeaway. That should have been the takeaway. Kevin from Spain. By the way, I saw some subbers, and I want to thank them. Loading Lotus and Kevin from Spain, thank you so much for subbing. We were in the middle of FOMC. I didn't want to interrupt. Yeah, that's a signed jersey from Ronaldo. But yeah, man, yo, I haven't had a turnout like this in a while. A lot of new chatters. You probably saw me on a bit high energy. We haven't had a stream like this in a long time. It's honestly been... Bro, Boomer, no way you just did that, man. Touche. I lost. I got so trolled so hard. It's not even funny. Wow. There's no way. There's no way. There's no way I fell for that. Wow. No way Boomer got us like that. There's no way. I'm too rusty. Guys. Just because Powell made a deliberate comment doesn't mean things are bearish, right? It doesn't. That is crazy. Right in the middle of my explanation, Boomer. There's no way you did that. Merry Christmas to you too, and hats off for the troll. You got me good. Oh man. He sends me to the closet in the middle of my explanation. So without further interruptions, after we were so kindly interrupted by Mr. Boomer with his 10 gifted subs, which, by the way, thank you very much, my friend. I do appreciate your support. Okay, look. I've lost track of what we were saying. But yeah, Powell making a specific comment was uncalled for. It's not something we're typically used to seeing. I want to say in the past 3 weeks, we've heard him speak twice about Bitcoin, one positive, one negative. Ironically enough, he said it in a moment where markets do not like this. They do not like things that go against the current administration. And he said things deliberately that went against an administration's executive order that looks to be launched on the first day. This is seen as uncertainty, and uncertainty creates doubt, it creates fear, and for that reason, you get panicky price action like we just saw. Now, naturally, a lot of people who were positioned before FOMC or had some sort of bet to the upside may have gotten attacked there, may have gotten hurt on that. As you guys can see, we have no positions. We were idle. We wanted to see what Powell was going to say. We had this slight understanding or belief that he could have said something politically charged. To me, that's a political charge because an administration is very bullish on the crypto sector, and to deliberately speak against one of those policies is an attack politically. In my opinion, that's how I see it. That's exactly what I was worried about. We ended up getting it. And as you can see, the market has responded. And again, you have to see it as after FOMC, risk gets taken off the table. It's the last 2 weeks before Christmas. Most people are leaving their desks now. They're leaving their desks. That was the last macro event for the year. They're taking their holiday. They're hedging up, tax selling. A bunch of things come into play. It's very, very similar to December of 2020. So again, everything went as planned until that comment, especially if you're on the crypto side of things. It can get pretty, uncertain now. But at the same time, I see it as an opportunity for everybody that waits patiently, that isn't forcing and shoving on leverage. These pullbacks, again, are just another day in the market of crypto. Maybe I'm a bit more concerned on the side of legacies because they did react really poorly to this meeting. They really did. But for the side of crypto, these are where dreams are made. These are where opportunities are found. It's just another day. 10% slashes across the board, 20% slashes across the board. If you've been here for a while, you've been here with me, you understand that this is a blimp of what we've seen in the past. My May 2021 boys, I know you're in here. I know you've seen 50 to 60, 70% across the board slashed in real time. If you guys think I panic over this stuff, think again. We've been through so much worse. We've been through so much worse. So again, this is just another day. Volatility. Cherish it, because there will be days where this goes sideways for hours and months and weeks with nothing. So you know how it is. You know how it is. I don't have to explain it to you guys. The new chatters, I know there's a lot of new ones in here. If you really, really did enjoy the stream, I hope I see you for the next time around. I understand a lot of you guys are probably from Johnny's Twitter or from Rob's Twitter. I do appreciate you guys having, come stop by. Hopefully it was something that, you had a bit of fun with. You saw that you got to see me go a bit off. You got to see me, conduct how I look at things. And again, if that was of any interest to you guys, I hope to see you guys again for the next time. But with that being said, we've been streaming for almost 2 hours here. And we covered all of the FOMC. We covered the rate release and the entire drop in real time. And yeah, my Discord boys, if you are in here still, I'll see you in the Discord. My Twitter boys, if you are from Twitter, I will see you on Twitter, and everybody else that's here for the first time. I hope to see you next time. But we will be signing out now. We will be ending the stream, and we'll end it with Consort Redan, Jerome Powell's legacy theme song. And with that being said, I'll see you all next time. Have a great day, have a great evening, and have a great night, or a great afternoon, or great evening and night. You know what I'm trying to say. See you next time. Peace out.